Okay. The bank is not responding, but I think the eyes are betraying that they can hear. Okay, I am Amon Ngechu. I think I'm doing here by top 5 in technology and business world. DIB, ACB, and SDM Bank. And look at the future of where fintech is going. So, Kenya financial sector is now at a defining moment. With fintech investment surpassing $850 billion, open banking becoming mandatory, generative AI, as we talked very much about here, is cutting production environment, not just about anymore. The innovation is no longer optional, but it is foundation. Well, I think the real question is not how fast, but then how do we respond to the scale, balancing growth, systemic stability, inclusion to risk management, and accountability to trust. Let's begin by looking at what we will define 2026. So, direct by panelists. Let's start with Angela. Kenya fintech investments have reached $850 billion in 2025. What do you think are the top 3 market trends that you see accelerating financial innovation in 2026?
Thank you, Amon. So I guess we give a bit of thought to what are the big moves that can be made in this space that can truly transform the performance, especially of financial services in the digital space. If you think about it, Kenya for the longest time has been known for being the innovator in the mobile space, which of course was necessary. But what you have to ask yourself is how much debt have we put into our financial innovation? So when you give it some thought like that, and we leave it with the venture capitalists who are saying let's put money behind all the different ideas that come out and all the different fintechs that are running around, how do we start to create that differentiation? So at KCB, one of the things I think you've all seen in the press is that we bought majority stake in a fintech, in a couple of fintechs actually. And the reason we did that is because when we think about it, it's about driving debt in financial innovation. So when we are saying that we want to have, every Kenyan can have a mobile wallet, but how many financial services, how much debt are we driving? So when you think about people living in rural Kenya or outside major towns in this country, what are the services that we are enabling for them? Now, it is not practical to expect that banks will be able to build those innovations at scale. We have to partner. And that's why we are doing these M&As, fintech partnerships, rolling out open gateways so that we can be able to integrate partners and then take that skill that we have built as institutions or banks, that trust and reliability, and bring that into the financial space. We're also looking at things like cross-border. That's another trend we're looking at. We're saying, I know you all know about the PAPs, the African payment systems, and we're saying, how are we going to enable payments across this region? How are we going to enable small traders? You know, we like to pride ourselves that we are from Matadi from the Atlantic. You know where Matadi port is? In the DRC. That is not a piece for everyone. Just tell it to the DRC. Trust me when I tell you that. Matadi is a port in the DRC which is next to the Atlantic Ocean. And you see, we go from the Atlantic to the Indian Ocean, to Mombasa, to Zanzibar. We're in all that territory. What can the fisherman who is in Matadi sell to the guy in Victoria? What are we doing? You know, the first thing we need to provide is the payment rails. If they can pay each other with trust, then we can start. So we think those two areas, if we can look at how we use partnerships to drive more inclusion, look at it with more depth in financial services, that is where we need the future innovation.
Wow, well done. Well, Joel, from what I can say, I hear mergers and acquisitions, I hear cross-border transactions, I hear venture capitalism, I also hear some elements of business and API. What do you think is going to stress our core systems, financial systems, among those trends?
Thank you, Amon. Good evening. Just to mention a few, looking at what Angela has mentioned, from the port, Congo to Zanzibar. So there are things that we really need to put across to ensure that we are able to then act. One of them is look at our legal framework. We need to modernize it so that it doesn't mean that when you look at what are the legal entities doing in Congo, what do they do in Kenya, and what do they do in Zanzibar, so that it helps us now do the cross-border payments. Secondly, is we also need to look at just risk-based tiered oversight. So we need to look at how are you looking at internet transactions. Is it just focusing on one entity, or you're just looking globally within the region? And I want to mention lastly, we need to then look at our regulatories. I know as BFSIs, there is IRA, there is CPK, and what do they have in common? So we need to see that they are able to then do their interregulatory alignment to be able to facilitate financial initiatives and also innovations across.
Thank you. Do you think that is a regulatory move that is, or information that is needed, balance information speed with the stability of
It is, and majorly, if you look at what you mentioned, basically, the PAPs, if you can't be able to transact, if then we don't have a legal framework that allows me to transact with someone in South Africa. At the same time, IRA still controls only insurance, and we need also to transact with those insurance firms. So how do we then modernize that? So that legal framework needs to be aligned across board.
Well said, well said. Hussein, we cannot talk of security without talking of digital native architectures. So, digital native architectures, generative AI, are both transforming core banking. For specific use cases are delivering high return on investment to the institutions and other institutions that you could be aware of.
Thank you. It's a problem issue right now. So what's happening currently, let's answer it in practical way. We both see that there is a lot of talk about cloud, there's a lot of talk about generative AI. Let's not get excited by that as the IT people. What's important is how do we turn that into revenue, cost, or what is the risk around all this that's happening. So where do we start from? I think what's important is to look at how do we genuinely see how can we add a 30% impact in terms of what we do with these technologies that are out there that we need to utilize. The first one we need to be cognizant of is always the fraud and risk, which is the most important pillar in terms of how you go about it. The first thing to do is, let's just think about a medium-sized Kenyan bank that is processing around 3 to 5 million digital transactions across mobile, cards, agency banking, and online channels. If your fraud rate is less than 0.1%, that can translate into hundreds of millions of dollars annually. Now imagine deploying an AI-driven detection model directly into your transaction pipeline, and that tells the behavior pattern in real time. And it actually uses, instead of using static rules, we actually use deviations to block transactions that are not aligned with the normal trend. If AI reduces by just 25%, our annual fraud exposure will come down from 800 million all the way to 200 million. That's not theoretical, that's the financial impact that it will have. Globally, banks like JP Morgan, Chase have demonstrated use of AI that reduces fraud as well as automates compliance, monitoring at very large scale that saves billions from operational costs. So that's the first one in terms of fraud and risk. The second one, what does it bring? It brings personalization and revenue growth. In home market, customers are digitally active and not necessarily product diverse. Cloud-based platform allow us to consolidate the transactional, behavior, and demographic data into unified environment. That is when GenAI and predictive models step in, anticipate needs before the customers even have to raise them. Imagine we have 1 million active mobile banking users. If AI-driven personalization increases cross-sell conversion by just 10%, the average product margin per customer is 5,000 annually. That's 500 billion in incremental revenue. That's the difference between reactive banking and predictive banking. finally, on this is operational agility. That's the third item. When you move from monolithic core systems to API first, microservices in the cloud, you don't just modernize, but you accelerate. Instead of waiting for 3 months for a product, you actually can deliver a product in 3 weeks. The speed matters because you have a faster product launch, you have quicker fintech integrations, you have reduced infrastructure risk, and even 20% reduction in infrastructure and operational overhead for a large institution, that is a huge impact on the balance sheet. In summary, cloud gives you scale and agility, AI gives you intelligence and precision, but the real return comes when you integrate both into the core of how the bank operates, not at the edges, but at the center.
Well, we talk about microservices, API-based communication. I want to push it further and ask you to tell us how you think biometrics and local platforms are going to enhance skills to market without compromising on security.
Thank you, Amon. Let's start by understanding something that is within our local region in Kenya. Identity is the key to inclusion. If I'm not able to identify you, I cannot include you. I will not have it part of that. We've seen how digital identity has actually transformed the payments ecosystem, especially in Safaricom and Hussein. That's something that is being referred to globally in terms of what it has done. The success of mobile money was built on simple but trusted communication. Now we are taking that foundation deeper into the market. And how should we do that? Biometrics matter because they solve two challenges, which at least one is security, the other is convenience. Take the facial recognition into liveness detection. Let's take an example. Today a customer can be in internet register and see the person now, and they can open a bank now within minutes in this market. No physical forms, no credit. Now imagine a bank onboarding 15,000 customers per month. If manual verification costs 1,000 shillings per customer, between the staff time as well as the processing overhead, that is 15 million monthly in terms of what is the operational cost. If biometric onboarding is taken, it actually comes into the pipeline, then that cost is even 30% less. And you are actually doing that within 4 to 5 million. What does that help? It actually helps in terms of efficiency as well as inclusion into the remote areas where we know the people that we are now targeting, the demographic that we are targeting, are not really aligned to come to families. So you're doing this entirely digitally. Fingerprint authentication also comes in, which actually builds great confirmation as well as authentication in terms of who the last mile user is of the service that we are providing, which actually helps in doing that. Now, but there is the important part which is important is biometrics must operate within strict governance. Now, that is something that we need to have in terms of how do we create the encrypted templates, how do we create the secure storage, as well as compliance within the data protection frameworks that are within there. What's important to understand is innovation without trust is short. Now let's talk about low-code and no-code. In the fast-moving ecosystem like ours, speed is competitive advantage. Suppose you want to launch a new SME learning workflow integrated mobile banking. Traditionally, that will sit within the IT backlog for 3 months. With low-code platform, it could be built and deployed within 3 weeks. If that speed allows us to capture 5,000 additional SME customers annually with an average revenue of 20,000, that's 100 million in commercial opportunity simply because you go faster. But again, this is critical. Speed without governance creates shadow IT, security gaps, and integration risk. So the right model is controlled empowerment. Business teams can build workflows, but within guardrails, role-based access, centralized audit logging, etc. Institutions like HSBC have shown that low-code can dramatically accelerate delivery, but not only when embedded in enterprise-grade control frameworks. So for me, the formula is clear: frictionless customer experience on the front end, structured governance on the back end.
How then do you audit these AI-based biometric decisions?
There need to now be at every page of the information that you do digitization in terms of when you're doing the CICD activity, you need to have the security tools that actually take the focus for you. Automatically, and give you the reply.
Thank you. Going to Joel again. Okay, implementing NCBA gateways, bit of them have been discussed on, but then data interoperability, and especially in the context of CPK open banking framework, mandatory review for the 3 of 2026. How are you architecting APIs and standards for fitness bank fintech data collaboration?
Thank you, Omar. I think that question is very technical. Angela and team might not really get to understand it. So one of the things that I want to mention is as part of integration and going into the next generation, is we need to look at standardizing our architecture and also integration. As the APIs kind of setup, that means, that's what I'm saying, if you talk of REST, JSON, SOAPs, so these things need to be standardized across so that we are able to achieve the immediate initiatives that we do. So that across board we understand these are standards that we need to look at and be able to implement within the shortest time possible and be able to meet the open banking framework. The other one is we need to go into zero trust. This is just to ensure that we have a better security model that covers every other aspect of our environments. And last is data governance. And just to mention a few, is we need to look at how are we governing our data across board. So this gives us now flexibility to run, be able to do open banking, and also be able to do all, put in the frameworks that are necessary to enable business across board.
Thank you, Joel. When we go to strategy, Angela, could you please tell us how banks are partnering with fintechs to capture the 15 billion unbanked or managing risks in the face of financial inclusion targets of 85% by 2027?
Okay, I'm not sure how all banks are doing it, but I can tell you what we are doing about it. Because it is true, yes. There is an assumption, because as I was here actually listening to, I kept thinking, all those customers, if you're thinking about people in rural areas, people in informal employment, they might have challenges having the type of devices that can do the type of, biometrics they're talking about, how you do education, provision, and so on. It's one of the things that we are talking about. Because yes, it's one of the ways to improve digital identity. But there is a fundamental gap in the types of devices we have readily available to us. When we talk about financial inclusion, that's one of the things we give a lot of thought to. How are we going to enable people first to access the types of devices that can allow us to provide broad number of services? Otherwise, you're just talking SSD. If you even check from mobile money, how many people are using apps versus USSD, it's still even more in transaction numbers to SSD than app. And what that means is that then you figure out how to make your own people without, based on their circumstance, not based on what's most convenient for you. So when we look at it, we say, okay, so partnerships are our strongest approach to achieving this. When you go and you look at the co-ops, the daily farmer associations, the chamas, all these types of institutions have a lot of local communities within them. So what we try and do is that we get those together, because when you're going to extend credit, one of the things you're going to try and determine is only two things, right? Ability to repay, willingness. Willingness is both the prayers, and ability is you can verify. But aside from that, what you can do is that you can work with communities to understand who this person is, what is the environment, who do they have association, which takes quite a bit of now technology to assist you to be able to check those associations and be able to know who can you lend and how to drive that financial inclusion. So when you think about chamas, the unincluded people in informal employment, people running really small businesses, we start to think about it from what in the environment allows us to be able to reach them. Which of our partners who is walking into the door with a solution allows us to reach that particular customer? That's how.
Well said. As you look at users need, you also look at data availability, internet, and all those. So to make our apps work and work well. I am hoping I'm not staying bad. I'm still on green. So, Joel, say by incidents, how they increase. What's your playbook for resilience? Around zero trust, AI, hunting, better risk management, and anything else you can add there, especially in both cloud and hybrid environments.
Thank you, Omar. I think the CISOs were here, and I had, at the moment, the fraud is also automated. So one of the things that we need to look at is also do SOC automation so that we really don't do manual monitoring of the incidences. Just include AI. It can help you do your analytics and also pick any peculiar transactions or even peculiar actions within your environment. And I think also the regulator is doing something. They are actually working on doing what we call sectorial SOC. This means within the financial institutions or within the BFSIs, then you're able to then share notes and see what exactly happened to you and what do we need to do then to mitigate that. In the environment of cloud, I believe it's now time that we need to integrate all the cloud security propositions so that you are not running independently, but you can be able to collaborate and reduce those security incidences. And lastly, look at also most of the incidences within security is actually internal. So we need them to educate our individuals on what awareness that what are the consequences of these incidences that you perpetrate or even you are part of, especially in the country. It is a criminal offense. And so really let's ensure that the people within are aware of what needs to be done.
Thank you, Joel. Hussein, for a minute, could you tell us that, how you structure procurement and partnership to access cutting-edge technology without costly, minimizing costs and avoiding better logging?
Thank you, Omar. Very briefly, I think that's through automation. Yeah? The entire procurement process can be automated using very simple apps. For example, if you're able to use the apps that are present within the Microsoft M365, you can actually use to set the entire automated process. Within the automated process, you can have AI that can actually do the analysis for you, and it will be throwing out for you any issues that are within the pipeline or within a particular vendor where the KYC checks as well as the AML and everything can be done within that automated process. It's just integrating and automating the process into that. Only to be as brief as possible.
Yes, thank you, Hussein. If you can add to that, you have to expect it yourself. Don't just
you have to architect it yourself.
Thank you. I want to get to the area still of AI, generative AI. So, GenAI agent for financial advisory services launched in 2026. What's your ethical AI roadmap aligned with CDK consumer protection and data sovereignty?
I think, just to mention, I think data governance is something that we need to look at. We also need to confirm at what point then do you need to get my data or share this data? And what architecture are you putting across? Is it centralized or is it Amon waking up today and just build his own AI and be able to provide that? So there should be a central point where we need to control that data. And that also goes into the regulator, that we need to have a formal framework that guides the bill across board. Just because of time, there are a number of things that one of the things is you will build your own system and then it becomes, let me call it, goes wrong. What happens? So we need to have that either data governance and social regulatory framework putting us across so that we have the same model going across the market.
Yes, a lot of AI delivery from the answers I get from my panelists. But as a final note, Angela, could you tell us what one financial innovation practice across the Kenyan ecosystem you would suggest you have that opportunity today?
Yeah, useful thing we could really figure out beyond, of course, solving infrastructure challenges, digital infrastructure challenges. I think the one that always stands out to me is digital identity. Because if we can centralize that a lot better, a lot stronger, if we can make it easier to know where do we find our people, where do they live, where do the kids go to school, who was born, who died, who changed their number so that they can be able not to keep giving the same person, the same mobile loan, and yet it's not the same guy who was here last time. If we could fix digital identity infrastructure through the Kenya government, not that each of us is running our own warehouse silos. We need one centralized that's really done well in the way they're doing it in India. In India they call it Aadhaar. They're doing it really, really well, and they are putting it across so that now you can start to scale it. They use it to get on trains. It's when you, okay, that one might not encourage you, but it's a good one. Like if they catch you on camera and you are speeding, they can just send you the fine, for the judiciary system to collect. Now, for us who want to bank at scale, a centralized, very strong digital, and I know it feels like I'm suggesting. The microphone agrees with you that it doesn't digital identity. But yes, trust me, it is a lot more practical if we could do that. We would be able to scale digital services to the president.
So, if brother we called on to assist us in the digital transformation, we will collaborate. Private sector, public sector, I think we shall get it right. Thank you.